Good evening, traders. Welcome to your 7-minute market update utilizing technical analysis to predict direction based on human emotion. Today is September 19, 2012. Lots to talk about, so let's get started. This is a chart of the SPY, which is the ETF that tracks the S&P 500. This is the daily chart. And in the previous video, or the weekend video, or the weekly video, I had mentioned this what is this called, a shooting star candle here, happening on not dramatic volume but somewhat of lower volume, indicating that there is a possibility that this guy could go higher. Now what the charts are telling me is this. It's really quite simple. Right now we had this up move here, we consolidated, and now we have another up move here, and then now we're just merely consolidating one more time, and that's a possibility that we may break out of this 147.05 level and continue higher. I did mention that we needed to close above this candle here to confirm the upside move. We have not been able to do that thus far. Right now the markets have been a bit weak, on the weaker side. It's kind of like taking a breather. This week is the week that options do expire, so you see a lot of volatility within the intraday trading. I mean, the last 10 minutes of today's candle was just a huge sell-off. So that's what's telling me on the bullish side. The bearish side is basically this. We have the shooting star candle. We may be pulling back here on this. I did mention that we may be pulling back, and that pullback may just be a consolidation period before going higher. However, that this is still a shooting star candle. It's not on substantial volume, but the fact remains that we did have a sell-off towards on this candle here, which is why we have this tail. Now, the bearish side is still telling me that we have broken out to the upside of a rising wedge pattern, which is very unusual. But when it does happen, a lot of times what does happen is that you break back down and trade within this so-called wedge pattern again. And if we do that, if we do actually break into this wedge pattern here, then this wedge pattern is still in play. I do have these yellow lines here which are mathematically calculated lines for going long. What do I mean by that? I mean this. If we get into this 144.30 level, then I'll probably be taking a long position on the SPY. The reason why I have not taken a long position on the SPY just yet is because we have already made that move up. What I'm looking for is that pullback or a consolidation period. Does this justify these 3 days here? Does it justify a consolidation or pullback period here? Yes, it does. The only thing that neutralizes this consolidation period here is this what you call shooting star. What do I mean by that? If we didn't have a tail in this candle and we were just going sideways, then I would say we would definitely be going higher because it's definitely consolidation. But because we have this candle here, it neutralizes this pattern, and now it's in a neutral standpoint, which means it could go up or it could go down. So this is the way I'm looking at it. If we trade back into this rising wedge pattern here, then it's still in play, in which case that the markets could fall. Do I think it's gonna fall? No. But what are the charts telling me? The charts are telling me this. If we do break down back into this trading pattern here, there's a good chance that we may break down from this rising wedge pattern, and that's how rising wedge patterns play. Meaning you rise up and eventually you fall, right? That's normally how it's played. What makes me think that it's not going to happen? It's simple. We have the elections coming up, and they've made it clear that they're going to save the markets every time it pulls back. So this is my idea of what may happen. Okay, so if we do pull back and we trade back into this rising wedge pattern, okay, it may take some time for us to do that, but let's just say it does, and it hits this 144.30 level, then that's when I enter in a long position or look for long plays in stocks. If it just so happens to reach this bottom trend line here, then I would do the same as well. Now if we close below this bottom trend line and we confirm the next day, then we will be heading down to this 141.95 level or this 141.58 level. That is what I'm seeing now, and that is how I'm probably going to play this market. But the chances of it doing that is unlikely, simply because of the QE3 announcement. And then whenever the Fed see that this thing is tanking, they're going to save it, like they've been saving it for this whole time. I mean, they brought it down, brought it back up, down, brought it back up, same old story, just different day, right? So same thing here. If they bring it down here and they see it heading towards down this bottom trend line here, they'll probably start buying the market once again. Now the volume has been pretty low. Today was a little over 100 million, which is very ridiculously low when our average is 150. So it's not gonna be hard for the institutions to and the Feds to prop the markets higher. But again, what they're gonna need to do is have this consolidate a little bit first before they go higher, or they make it go back into this rising wedge pattern, which is probably more healthy, and then they bounce it off this level here. There is a possibility we will find some support here. A lot of times when you have a breakout of anything, your recent resistance line here turns into support. Some may say that, but I honestly don't think that's going to happen. It is definitely a possibility, but I don't think that's going to happen simply because we're in a rising wedge pattern here. So the chances of it breaking down from this supposed support line is going to be what did I say? The chances of it breaking down from here is higher than it bouncing off of it, but that's always still a possibility. So that's just something that you want to keep in mind. The next level, if it does break to the higher side, is the 157 level, in which case I'll be taking a short. Okay, so that's the SPY. That's what I'm looking at for now. Again, the yellow lines is when I would go long, and the pink lines is when I would short. Okay. So this is a chart of the US dollar futures. Okay, right now I had this $78.74 level. The lowest we had on this candle was $78.73, so I was 1 cent off. Alright, so we had that bounce in the dollar, and we all know when the dollar goes up, the markets go down, and vice versa, right? So the markets are going down right now. Well, I'm sorry, the markets are getting a bounce off of my level here, and which is why the markets are pulling back a little bit. Do I have a level? Yes, $80.61 could be a potential level. You know what? Give me 1 second. Hang on. Alright, I just recalculated because I noticed that I made this calculation on this day all the way over here, and it held up on this candle here. So let me just recalculate here. The next calculation I have, excuse me, to the upside is 81.26. So let me just put that in there. Alright, so that's the next major resistance point. Again, whenever I make these calculated levels, I'm not saying that's what it's going to do, or that's how it's going to get there, or that it is going to get there. What I'm saying is if it does get there, that's when I would be willing to take a short and or go long on the SPY. As it is now, that's quite a ways to go. You know, that's about $4, $3 away. This is 70. Well, it's only about a couple bucks away. So, you know, that is a possibility. Obviously, we're gonna have some resistance at this trend line over here, which is right around, you know, the $80 level. But well, all I can say is this is what the calculation spit out, which is $80.26. We'll see if it gets there. If it does, then I'll probably be going long the market at that time. If it doesn't do that before it even gets there. Okay, so that's the way I'm looking at the dollar. Let's take a quick look at the UUP. Actually, let's take a quick look at the USO. Now, the one thing that concerns me is a lot of times oil, when oil starts going down, then the markets follow. Okay, so that's one thing you have to make note of, that the markets will follow. Let me load my drawings in here. I shouldn't say will follow, but the chances of it following is high. Now, we broke down from this bottom trend line over here, and then after the breakdown, I get my mathematically calculated level from the middle of any rising triangle. And a lot of people do not do it this way, but I find it to work out pretty well, or better than the standard. Okay, so what I do is I measure the top and the bottom of the middle pivot. I move this to the breakout point the breakout, and then what I get is a level at about $32. I did have a mathematically calculated level which is at 33.11, and then another one at 31.08. Let me just put that in there as well. 31.08, and this is these are yellow lines, so I will go long the USO if it reaches these two levels here. So I'm looking at the 33.11 level, and this could potentially be the level that I may actually go on the long side for. Okay, again, they'll probably be saving the market. So if oil continues down, the markets may actually follow. So that's something that you want to keep an eye on. If we break down from this, from this area over here where we have this measured area here, okay, and then we have this mathematically calculated level here. If we break down below here and we confirm, then the next point I'm thinking about is this 31.08. Okay, I don't see anything else except for this pivot point here that measures up to this 3108. We do have this pivot point here, which will also be some pretty good support. We'll have this gap fill here, which will be pretty good support, and then we'll have this double bottom, which will be pretty good support. But in essence, you know, I like my mathematically calculated levels. They've been working out pretty well. You guys know, and you guys have been witness to these mathematically calculated levels. So, you know, we'll just see how it goes for the USO. All right. Anything else I want to talk about? Just flipping through charts here. We have the FCX. The FCX, I had a calculated level here of $40.54. It didn't quite make it there. The low for here was $40.78, so I was off quite a bit for the FCX. But you know, that's the game. I mean, nothing's perfect, unfortunately. I'm not gonna lie to you guys or make up any stories. If these calculations don't work, they don't work, you know, and they've been working pretty good. But you know, you have times like this where it's not perfect, and then you'll miss it just by a little bit. One thing that I've noticed about these mathematically calculated levels, and just because you, the original watchers of my video, or videos, I've I just wanted to make mention of another discovery that I made just recently. Okay, so what happens, like sometimes the mathematically calculated levels aren't perfect. We all know that, right? But sometimes they're pretty close, you know, to the penny almost. And we had this level of 132.08 for Baidu to take a short. What happened was it went right into this 132.08 level, and then we actually got that intraday pullback, okay, on numerous days. So you know, it's this line has held up pretty well. We broke through the line, but we did not confirm, meaning we did not close above this candle here, and then we just broke down. But if you noticed, right, the top was actually here. All right, that's the top of where Baidu was. And then if you notice, Baidu came all the way down, and I had this other level here, which was 104.33. Okay, so if you notice, it was it didn't quite make it to the 104.33. So this is what I've been noticing on a lot of charts. When sometimes when the mathematical calculation does not work, what I'll do is I'll find whether it's long or short. In this case, it was short. I'll get the top of this candle to the bottom of the mathematically calculated level, and that's how much, that's the price difference or the size difference that it was off. And what I'll do is I'll bring it down to this portion here, and that's how much off it was. So you can see how pretty symmetrical that was. So if I was to take this trade, and I'll be honest with you guys, it didn't take this trade, but all I needed to do was notice that the top here was off by this much. All I had to do was add this to this calculation here, this line here, and you know, when price went into this line, then I would have just went long, and then I would have been nicely in the money today. But that's just something that I'm keeping my eye on right now. It's very symmetrical. The calculations work very well, but when it's off, it looks like it's a symmetrical offset. Therefore, I can still predict and or call when the stocks will reverse based on the mathematical calculation. In any case, I'm into 13 minutes. I know this is a 7-minute market update, but this is your 13-minute market update. If you like these videos and you're making money off these videos and you want to continue to see more videos, please do subscribe. You know, and I do appreciate you guys taking the time out of your day to watching these videos. God bless you all. Good luck to your trading, and I hope to see you in the next video.